The Colorado housing market is one where home prices have actually declined over the last 18 months, dropping by 4% from their peak in June of 2022. But even with this small decline, home prices across Colorado are still very expensive and, in my opinion, have more downside to go before home buyers will come back into the market. Because if we look at data on Reventure app, we can see the typical value of a house in Colorado is $531,000. These prices in Colorado, they're the fifth most expensive in America in terms of the typical home value, trailing only California, DC, Massachusetts, and Washington. And so you combine those still very high home prices in Colorado with mortgage rates that are now above 7%, and you get a raging affordability crisis, which is causing many would-be home buyers in Colorado, whether they're in cities like Denver or Colorado Springs, to sit on the sideline of the housing market. Conversely, other people are just choosing to leave Colorado. With a metro like Denver losing 1,300 people in the most recent year, we can see that Denver has actually lost people now 2 years in a row, which is a huge shift from when Denver was a migration all-star for much of the last 30 years. Now, folks, I want you to think about that. Denver was known as a city for decades that would attract lots and lots of people moving in. That's something that really pushed home prices up over the last decade, yet now Denver is a net loser when it comes to migration. I mean, that's a massive shift that's going to have a big impact on the housing market in the short to medium term. And we're already seeing that impact play out through a pretty sizable increase in inventory on the Denver housing market. With data on Reventure app, which is the tool that I'm using in this video, this tool is something that you can access for yourself by going to www.reventure.app. Well, this data is showing that there's 6,600 homes for sale in the Denver, Aurora, Lakewood metro, and that the amount of homes for sale has more than doubled from what it was back in the winter of 2023, now to close to the highest level we've seen since 2019, since before the pandemic. So no longer is inventory on Denver's housing market low. In addition, the number of sellers cutting the price, that has also surged up in recent months to almost 40% of sellers reducing the price in Denver. You can see this is above the long-term average of 25% of sellers reducing the price. And so that's a giveaway, everyone, that there could be downward pressure on home prices in Denver over the next 3 to 6 months, because we're seeing that rising inventory, we're seeing increases in price cuts. That's saying that the market is shifting more to favor buyers. Because you gotta understand, everyone, home prices are very overvalued throughout Colorado right now. I mean, they boomed for so long. They boomed for almost a decade, way faster than the growth in incomes. And when home prices boom faster than the growth in incomes, that's the sign of a housing bubble, everyone. If you go back 100 years throughout US housing market history, you will realize that the telltale sign of a bubble is home prices rising faster than incomes. And that situation has led to home prices in Colorado being 23% overvalued as we enter 2024. You can see here that the typical home value in Colorado of $532,000 is 23% above the fair home price of $432,000. That's basically telling you what the fair home price is based off income. Another way to think about this is to look at the home value to income ratio in Colorado. You can see right now it's at 5.8. The typical value is 5.8 times the median household income of $92,000. That value to income ratio is 23% higher than the long-term norm of 4.7. So this is how you know that your housing market is likely in a bubble and is overvalued, when this home value to income ratio goes above the long-term norms. Conversely, when it goes below the long-term norms, that's a tip-off that the housing market is undervalued and that prices could be going up in the long term. So this is a very important metric for you all to look at, whether you're a home buyer in Colorado or some other part of America. What's the home value to income ratio history? But of course, there's huge differences across the state of Colorado in terms of overvaluation and in terms of the direction of home prices right now, because there's certain markets where home prices are down by double digits, whereas there's other markets where home prices are still going up. And you, as a home buyer and investor, you have to know what these trends are in your city, in your zip code, so you can make a more informed decision. For instance, on Reventure app, we have a data point called percentage change from June 2022. And this data point is measuring the percentage change in home prices from what's basically considered the peak of the housing bubble in the middle of 2022. And what do we see here? We see that prices actually on the eastern side of Colorado are down. They're down by 6% in Boulder, 5% in Denver, 5% in Colorado Springs. They're down by 11% in Breckenridge, yet prices are still up in Edwards and Glenwood Springs as well as Durango. So there's big differences in how prices have shifted over the last 18 months, which is very, very interesting. I mean, if we zoom in here on Breckenridge, you can see that the typical value of a home was over $1 million in June 2022. Now it's down to $950,000, which is still very, very high, but it's heading down. Whereas in Durango, Durango, we could see there was a correction in prices, and now those prices are going back up. Now, why would home prices in Durango be going back up, whereas they would be going down in other parts of Colorado? Well, for this, folks, you're going to want to look at the inventory levels. The inventory levels are going to tell you a lot about the current state of your housing market, because if inventory is like still really, really low, that's a signal that prices will be stable or maybe could go back up. Whereas if inventory is back above the long-term norm, that's a signal that prices could go down. And in Durango, we can see that the for sale inventory is still very, very low. 278 homes on the market compared to a long-term average of 416. And you can see before the pandemic, it was typical to see, like 700 homes on the market in Durango. So these inventory levels here need to increase by more into the future in order for us to see prices go down in Durango again. Now, conversely, let's go to Colorado Springs. Colorado Springs is a market where the opposite's occurring. You can see inventory is now up significantly. It's almost quadrupled from its lows during the pandemic and is now above the long-term average. So if we have inventory above the long-term average, that makes it more likely that prices are going to decline. And folks, you guys have to know this data. And I don't want to just like repeat myself and beat a dead horse here, but you as a home buyer in Colorado, you need to know what this data is on inventory and home price trends in your city and in your neighborhood and zip code, because I'm going to get into some neighborhoods and zip codes in a second. But the reason you need to know this is because relying on national housing market reporting for all 50 states, all 500 metros, that's not going to give you real insight into what's going on in your market. You need to understand the data for yourself month by month, not just for your state, not just for your city, but also your zip code. Because if we focus and zoom in here on Denver, what do we see in Denver? Well, one thing I see is as I change the data point here to price cut percentage, which is the percentage of listings that had a price reduction in the last month, we can see big differences in where sellers are cutting the price throughout Denver. Like if we go to the zip code 80207, kind of on the eastern side of urban Denver, we see 62% of sellers reduce the price in the most recent month, whereas in another zip code 90230, only 10% of sellers reduce the price. So clearly if 62% of sellers are reducing the price, there's going to be more downward pressure on prices. And when we go to the historical price cut chart, we can see 62%. Yeah, that's way above the long-term norm for price cuts for this area, which is a signal that there's downward pressure on prices. And sure enough, if we go on Zillow and look at different listings in this area, we can see quite a few of them have price cuts. Like on this house here, this looks to be a home flip. There's a $15,000 price cut, which is improving the price, improving the affordability. However, you can see the values are still significantly higher on this house than they were historically. Maybe is it Zillow? I don't know if it knows that there was a renovation done. Here's another house here that just had a $20,000 price cut down to $528,000. This looks to be another renovation, another flip. Flippers are kind of active in this neighborhood. You can see they reduced the price by $20,000, but again, the house is still worth way more than it was back in 2015. Some of that's due to the renovation, some of that's due to market appreciation, but really you can still see if you're to buy this house with a mortgage at around a 7.2% mortgage rate, your monthly payment would be $3,250 a month, which is still pretty high. That's almost $40,000 a year to own this house. So the question is, do you folks have $40,000 a year to pay for a house in Denver? Maybe some of you do, maybe some of you don't, but that feels expensive to me, especially because the median income in that zip code is around $100,000. So that means people would be spending 40% of their income on a house like that. That says to me that we're going to need to see some further declines in home prices and mortgage rates to bring more buyers back into that market. The thing that concerns me about Colorado's housing market and suggests to me that home prices could be going down into the future is the relationship of home prices and mortgage payments to rental rates. Because in Colorado, especially in a market like Denver, it is significantly more expensive to buy a house and pay your mortgage than it is to rent a house or rent an apartment. With the buy versus rent differential in Denver being 92%, meaning it's 92% more expensive to buy a house and pay a mortgage than it is to rent an apartment. And it's this big gap between the cost of buying and renting that's going to keep a lot of people on the sidelines from buying, because when they do the calculation, especially if you're a first-time home buyer and you figure out like, oh, I can have a lower cost by renting, a lot of people are going to continue to do that. Additionally, this situation between prices and rents is problematic for real estate investors because the lower rents relative to prices means that the returns for these investors are pretty low. With the typical cap rate in a market like Denver being only 3.9%, that's pretty low considering that the one-year US Treasury yield right now is above 5%. So an investor in Denver who either already owns or is looking to own, they might say, hey, it's more worthwhile for me to just invest in government bonds or get 5% in a CD than it is to buy buy real estate. You can get a better sense for this by looking at this listing here on Zillow. It's a 3-bed, 2-bath house in Denver on the market for $2,800 for rent. Now you could see the landlord has cut the rent significantly. Initially they listed it for $3,500 a month. They've had to cut it to $2,800 a month. And if they do rent it for this amount, that's probably going to be around $34,000 in gross rental income and $25,000 in net rental income, which is again not very good because they bought this house 3 years ago for $615,000. So if they get $25,000 in net rental income on $615,000 purchased from 3 years ago, that's a 4% cap rate like we talked about before, which isn't very good. So a lot of the investors that own in Denver, they're going to have an incentive to sell at some point given these really low yields, which could push the market down further. Now, before signing off, everyone, let's do a rapid fire round and look at all the different counties across the Colorado housing market. Let's try to target the ones that could be most in the crosshairs of home price declines over the next 3 months, 6 months, maybe even the next year. And in particular, I'm looking for counties where home prices are heavily overvalued and where there's been a big surge in inventory of homes for sale. Because if you have heavy overvaluation with a big surge in inventory, that's the cocktail that could produce big declines in prices. So if we go here on Reventure app and change the view to county view, we can see home price overvaluation across all the different counties in Colorado. And you can see there's some big differences. Like Pueblo County, home prices are 35% overvalued, whereas in Denver County, they're only 10% overvalued. So big differences on overvaluation depending on where you are. Now let's look at inventory and let's focus on an area like Pueblo County, where we can see the inventory has surged from a low of 210 homes for sale 3 years ago all the way up to 650 homes for sale. And if we take a look at this on a monthly basis, we could see on a monthly basis the inventory is just surging back up. This is the signal of a market where prices are likely to go down more into the future because we got that heavy overvaluation plus that surging inventory. Now conversely, what if we go up to Larimer County where Fort Collins is? If we look at Larimer County, we can see the inventory is going up for sure, but now it's only about back to the long-term average. So the inventory is going up, but it hasn't surged yet. So this is one where we're more in the middle. I think there could be some downward pressure on prices in Larimer County. Let's take a look at how overvalued prices are. They're 18% overvalued. You can see that overvaluation is improved. And the reason this overvaluation is improved is actually not because prices have dropped. Prices only dropped a little bit, but because rather incomes in Larimer County and Fort Collins have surged, with the median household income going up in just a year from $78,000 to $87,000. Clearly, some of them are getting wage increases, which is going to feed into support for home prices. However, I wouldn't be surprised if home prices are still go through a correction due to their 18% overvaluation. So folks, what I really encourage you guys to do, whether you're a home buyer in Colorado or any other part of America, is understand this data for yourself for your housing market. How are home prices trending? How's inventory trending? How overvalued are prices compared to long-term norms? Go to www.reventure.app right now to look at that data for yourself. Reventure app has this data available for every state, metro, county in America, as well as most zip codes. You can see data on home value and home value growth, as well as inventory and inventory growth for free, as well as access premium data points like value to income ratio and overvaluation rate by becoming a premium member. The cost for that's $39 a month. So head to www.reventure.app right now to check out that data so you can make a more informed decision about your home buying process as either a regular buyer or an investor.